It is 9:58 a.m. Pacific Daylight Time. It is the 10th day of March, 2026, and this is episode 1274 of Bitcoin and Tornado Cash. The Department of Justice is not done with Roman Storm. You thought it was bad before. It gets even worse, which brings up the question, where the hell's Trump? Why isn't he stopping this? Why hasn't Roman Storm already been pardoned? I thought he was on our side. It's just because it's politicians. It has nothing to do with the fact that whatever it is that you think Trump is, it has nothing to do with that. It has everything to do with the fact that he will tell anyone, anything, anywhere, at any time to get votes. It has nothing to do with him being Trump. It has to do with being a politician and, honestly, pretty savvy businessman. I mean, I don't like it, but it is what it is. We're going to start with the story of Roman Storm and Tornado Cash, but then we're going to move on into Coinbase because they are launching regulated Bitcoin and crypto futures in Europe. And then we are going to touch on strategy. We are going to do it because, well, reasons that you'll find out about. Kraken partners with NASDAQ. That's going to be interesting to see what they're doing. And a lawsuit from the banking lobby. It's not outside the realm of possibility, y'all. They're crying. Their diapers are wet and they're very, very, very cranky. They're cranky and they're coming after us, apparently. Bitcoin and AI, is it a golden opportunity? Well, Jack may have something to say about that because, stablecoin. And then the idiots over in Bhutan decide to pull the trigger and sell a lot of their Bitcoin. Because, yeah, this is when you needed to do that. When the world is on fire and nobody knows what the hell to do, there's no safe havens left. And what do? You pull the trigger at half the price and you start selling. That's a great idea. And then Babylon and Ledger also have a partnership. I'll tell you why, but first, Tornado Cash. New trial for co-founder Roman Storm is set for 2026. This is atlas21.com. U.S. prosecutors have formally asked the federal court to set a new trial date for Roman Storm, co-creator of the Tornado Cash platform, who is facing several financial crime charges. According to documents filed on Monday in the U.S. District Court of the Southern District of New York, of course, our good friends at SDNY, the Department of Justice intends to proceed with a second trial, not just one trial. Now they're going to do it again. They want him in another court case to focus on two unresolved counts. Federal prosecutors proposed starting the proceedings between the first and second week of October 2026 with an estimated duration of about 3 weeks. Roman Storm is at the center of an investigation involving Tornado Cash, a decentralized digital asset mixing protocol that federal authorities claim was used to launder more than $1 billion in illicit funds. The first trial, which concluded last August, produced a partial verdict. The jury found Roman Storm guilty of operating an unlicensed money transmitting business, but failed to reach unanimity on the charges related to money laundering and violations of international sanctions. Prosecutors specified in their filing that they intend to proceed again on counts 1 and 3 of the superseding indictment. Although a defense motion for immediate acquittal is scheduled to be heard on April the 9th, which was yesterday, and I don't know what's happened, the Department of Justice has urged, actually not yesterday, last month, and I don't know what happened. Anyway, the Department of Justice has urged the court to set a trial date to avoid future scheduling conflicts. For Storm, a conviction on both charges at issue in the new trial could carry a maximum sentence of 40 years in United States federal prison. In a message posted on X, Storm stated, quote, "I will never stop fighting for freedom. The 2 counts equals up to 40 years in prison for writing open source code. For a protocol I don't control. For transactions I never touched," end quote. Storm also revealed that he has already exhausted the funds allocated for his legal defense. The legal proceedings against Storm began during the Biden administration, but the Department of Justice's stance towards software developers has evolved under the Trump administration. I don't see how. Last August, Matthew Gelotti, acting Assistant Attorney General for the Criminal Division of the Department of Justice, explicitly stated that, quote, "writing code is not a crime." Additionally, a recent Treasury Department report submitted to Congress acknowledged that mixers, such as Tornado Cash, can have legitimate privacy-protecting uses, including safeguarding personal wealth or protecting charitable donations. It is also worth noting that the sanctions imposed by the U.S. Treasury on Tornado Cash in 2022 were lifted in 2025 following a favorable court ruling. And that's all we know right now. So, Roman Storm is going to go up to trial again. Now, he's already been found guilty on one of these charges, but they want to nail him to the wall on charges that a decision was not reached in the jury. So they're just saying, fuck it, let's have a whole new trial. Let's pick a whole new jury. I mean, I guess that the grand jury that determined that these charges were in place in the first place for the first trial, I guess they don't even have to have another grand jury. I guess they can just go on the original grand jury and say, well, the jury, never really came to a conclusion on counts 1 and 3, so let's do it again. Let's waste more taxpayer money to prosecute this dude who never touched a transaction because he didn't, and is writing open source code for a protocol that he cannot control. It's not centralized. That's one of the whole points behind Tornado Cash and mixer services in the first place. Anyone can run a mixer. You just get the code and get a Mac Mini or something and start running it. He can't control. He just wrote the code. And then we have all this really confusing language coming out of the Department of Justice, Treasury, Financial Crimes Division, you name it, man. It sounds to me like they're saying, well, mixers are okay. Oh, and this other guy is saying that the acting Assistant Attorney General for the Criminal Division of the DOJ explicitly stated that writing code is not a crime. So we're getting 2 completely different and very conflicting situations going on, and Roman Storm and his family caught right in the middle. All this shit needs to end. I've said it before, and I'll say it until I'm breathless and cold in the ground. But he's going to go up to trial again. They're not done with him. I don't even know how you're making an example of this person. You're more making him a martyr at this point than you are making him an example. So dig your own hole, DOJ. We'll be there to fill it in. Meanwhile, Coinbase launches regulated Bitcoin and crypto futures across Europe. From Bitcoin Magazine, Micah Zimmerman is writing this one. Coinbase has rolled out futures contracts to traders in 26 European countries, including Germany, France, and the Netherlands, marking the first time the exchange has offered derivatives directly to users in the region. The products are available through Coinbase Advanced, the company's high-performance trading interface, and are offered by its MIFID registered European entity, ensuring compliance with EU financial regulations. European traders have historically relied on unregulated offshore platforms for crypto derivatives, navigating regulatory gaps and exposure to operational risks. Coinbase's launch provides a regulated alternative offering cash-settled futures on Bitcoin and crypto-linked equity indices, including the Mag 7 plus crypto equity index futures, which blend exposure to major technology companies, Coinbase stock, and spot crypto exchange traded funds. The platform offers two main types of futures contracts. Perpetual style contracts carry 5-year expiry dates, use an hour funding mechanism to align prices with the underlying assets, and they settle daily. Dated contracts have monthly or quarterly expirations, are marked to market every day, and settle in cash at expiry if held to maturity. Transfers or traders can use up to 10x leverage on select contracts, including Bitcoin, shitcoins, and certain equity indices, while other products offer leverage in the 4x to 5x range, the company said. Yes, because when you're not poor enough, use leverage. Trading fees start at 0.02% per contract, though they exclude exchange, clearing, and NFA fees. Eligible users must pass trading experience checks and KYC verification before funding their accounts with euros or USDC to access futures trading. Pausing. They're not going to use Tether. They're going to use Circle and USDC. That's the stable coin. Why? Because they got a deal worked out, and Circle is completely regulated in the United States. Tether's regulated USDT. I don't know what it's a USAT, I think is what it is, but it's the USA version of stablecoin for Tether. It's done by Tether. It's regulated as Circle is in the United States, but we're not seeing it grab any traction here. So just be aware, Tether is not going to be eligible for this particular use case of Coinbase, even though it's in the European Union. So I find that a little odd and a little selective. But Coinbase emphasized that derivatives are complex, noting the potential for rapid losses due to leverage, and advising users to consider professional guidance. Here's your professional guidance. Just buy Bitcoin. It's not hard. The launch forms part of Coinbase's broader strategy to create an exchange for everything. Beyond crypto trading, Coinbase has added stock trading for U.S. users, offering equities such as Apple and Tesla around the clock, introduced prediction markets through a partnership with Kalshi, and outlined a tokenization roadmap aimed at on-chain access to traditional assets. Coinbase's European expansion comes amid a broader market decline, yada, yada, yada. They talk about price. And in other news, NASDAQ said today that it plans to work with Kraken, which we're going to talk about, but not right now. It just struck me. They say that Coinbase has a broader strategy to create a, quote, exchange for everything. Exchange for everything. X. My prediction is that Elon Musk is going to buy Coinbase. When? I don't know. I don't know if it'll actually happen. But there's something about, because he wants X to be the everything app, right? He's already clearly made motions that he's interested in getting all this stuff kind of in X. What better way to seal that deal than to go kiss Brian Armstrong's ass and tell him that he wants to buy the entire fucking thing? I'll bet you that sometime this year, we start hearing serious language out of the crew of X and Elon Musk about a purchase offer for Coinbase. But then there's strategy. They have recorded their biggest STRC issuance day with an estimated 1,420 Bitcoin buy. Let's kind of break down what that is. This is Cointelegraph. Michael Saylor's strategy. The world's largest public holder of Bitcoin sold a record amount of its perpetual preferred equity called Stretch. That's the ticker symbol STRC. After amending its sales rules on Monday. Strategy is estimated to have bought 1,420 Bitcoin in a single day after selling roughly 2.4 million STRC shares through its at-the-market program, according to data from strc.live. The amount marks the largest estimated daily issuance of Stretch and BTC purchases, surpassing the previous level of 1,069 BTC, according to a Monday X post from STRC.live. Strategy announced a major rule change. Ooh, rule change, yay! At its at-the-market share sales program on Monday, allowing a second agent to sell the securities before the U.S. market opens and after it closes, easing a prior restriction limiting such sales to one agent per trading day. STRC is one of the major pillars of Strategy's Bitcoin buying. STRC is Strategy's variable rate perpetual preferred stock launched in July of 2025 as just one of several securities the company uses to help fund its Bitcoin treasury strategy, alongside other at-the-market programs such as Stride, Strife, and Strike, and their common stock ticker symbol MSTR. Strategy says the stock pays monthly variable cash dividends with the annualized rate for March set at 11.5%. It's the yield, baby, some market observers said. The updated sales structure would make it easier for Strategy to issue stock more efficiently during pre-market and after-hours trading, potentially accelerating future capital raises tied to Bitcoin purchases. Quote, a lot more capital will be raised and a lot more Bitcoin will be purchased, market observer Ragnar said, according to STRC.live. Last week's estimate suggested STRC proceeds would fund a weekly purchase of approximately 4,300 Bitcoin. However, the actual purchase exceeds expectations as Strategy reported selling around $378 million in STRC in its filing with the SEC on Monday. The company reported a massive $1.3 billion Bitcoin purchase last week, marking one of its largest Bitcoin acquisitions ever. Common stock MSTR accounted for the largest proceeds and reported sales, generating nearly $900 million in proceeds. The results for Strike, STRC, Stretch, not Strike, Stretch, underscore ongoing rapid acceleration of investor interest, despite the Bitcoin price trading below Strategy's reported average cost basis of $75,862. What does this tell us? One of two things. Either people are just still piling into these perpetual preferred stock things that Michael Saylor created out of thin air, I might add, or somehow or another, Michael Saylor's figuring out a way to buy this shit himself to make it look good. I actually don't think that that's occurring. I think it's the first one. I'm getting the feeling. I kind of figured Paper Bitcoin Summer in the aftermath would have taken care of a lot of the, would have washed out a lot of the goons. A lot of the dipshits. But no, this has not occurred. In fact, it looks like they're piling back in. I feel bad for the people that hold MSTR because they're being diluted out into oblivion because they keep printing MSTR shares. But hey, what are you going to do? I can't call Mike on the phone and say, hey, quit, stop. You can stop trading now or whatever. In either event, the idiocy has not abated. So what does this mean for everything else? I don't know, man. It's kind of creepy, to tell you the truth. It's kind of creepy. But NASDAQ and crypto exchange Kraken, as I mentioned before, have partnered to bring tokenized stocks to global markets. Oh, joy. Micah Zimmerman is writing this one for Bitcoin Magazine as well. Payward, the parent company of cryptocurrency exchange Kraken, has partnered with NASDAQ to build a gateway connecting traditional stock markets with blockchain networks. The project will use Payward's X Stocks platform to move tokenized equities between regulated institutional markets and permissionless, decentralized finance networks in regions where the service is approved. In short, tokenization turns financial assets like stocks, bonds, and funds into digital tokens that can operate on blockchain networks because, we need more of that. For equities, Tokenization allows shares to maintain their usual rights, including voting and dividends, while also being traded on digital networks or integrated into financial applications built on blockchain. X stocks has already handled more than $25 billion in transactions since its launch, including $4 billion settled directly on chain. And last week, Kraken became the first crypto native firm to gain direct access to the Federal Reserve's core payment system after its banking arm, Kraken Financial, received a master account from the Federal Reserve. It's a federal master account, but it's like a master account light. They don't have all the rights and privileges, but they got most and a lot of the ones that matter. But it lets the company settle dollar payments on FedWire without relying on any intermediary banks. So this is good for them. The platform has over 85,000 holders across supported networks. NASDAQ's equity token framework, expected to go live in the first half of next year, will preserve issuer control, follow existing regulations, and maintain the rights of shareholders. The gateway is designed to make it easier to move tokenized shares between regulated markets and open blockchain networks. Clients will be able to swap assets from institutional trading systems to decentralized networks while staying compliant with local rules. Payword Services will handle KYC and AML, making sure everyone accessing the gateway meets regulatory standards and is put into a government database. I added that last one, but that is actually true. Arjun Sethi, co-CEO of Payword and Kraken, said tokenization changes how equities function at their fundamental level. Tokenized equities can move between venues and blockchain networks, allowing the same shares to serve as collateral across multiple trading strategies at once. Hold the phone. The potential for rapid and absolutely mind-boggling amounts of rehypothecation just entered the room. Strippers to the left, cocaine and drugs to the right. Have fun at the party, man. Anyway, this can expand effective exposure across markets while keeping risk under control through a unified margin system for you international investors. Tokenized equities can open access to markets where TradFi brokerages are hard to reach. In more developed markets, tokenization can improve capital efficiency, letting equity collateral be used for trading, lending, and hedging within a shared pool of liquidity. This partnership comes as tokenized equities expand globally. Platforms like Robinhood and Gemini and Coinbase already offer tokenized stocks in Europe. NASDAQ previously asked the U.S. Securities and Exchange Commission to allow tokenized and traditional versions of stocks and ETFs to trade side by side. Both forms would settle through the depository trust to stay interchangeable. Tal Cohen, president of NASDAQ, said tokenization could create a, quote, always-on financial ecosystem where investors can access markets and issuers can engage with shareholders in new ways. Oh, how profound. Oh my God, this is like blowing open every barrier that there ever was to just sheer unbridled fucking greed, just vaporized. It is a no holds barred, free for all frolic out there in the money mud pit. Just buy Bitcoin, hold Bitcoin, and use it to buy GreatGhee at greatghee.com that will get you some great ghee. What is it? It's cooking fat. It's made from butter. Let's just be very, very clear about it. It's butter that you melt and you keep it hot, not boiling, but you keep it pretty hot, and it allows all the rest of the water to evaporate and all the sugars and any proteins that are left in butter, of which there is quite a bit, fall to the bottom and basically separate from just the animal fat you find in butter. It becomes shelf stable, which means that you don't have to refrigerate it. It also has a very high heat stability, which means you can get this shit up to like 450 degrees, which is great if you want to, like, me and my wife started experimenting with sous vide, right? So that's where you basically heat a steak up in a plastic bag in a water bath so that the steak doesn't get all waterlogged. and you keep it there for like 100 to, it's like, I don't know, like keep it there for like a couple of hours to 128, 130 degrees. And then you can take it out and it's already cooked. I never thought I'd like this because I was like going, ooh, it looks gray. But not if you throw it in a really hot freaking pan with some GreatGhee, because it also adds flavor. So now the steak gets really nice and brown on the outside. It's perfectly done on the inside. So by all measures, any picture you take of it would look like, well, that is a very fine pan-fried steak. And I love pan-frying my steak, especially when I use ghee, because the flavor profile is so deep. It is so delicious. You just will never, you can't understand it until you get some. Go to GreatGhee.com. Use the affiliate link that I have for GreatGhee in the show notes. It's a link. You can just click it. And that way it tells GreatGhee that you heard about it here on the BitcoinAnd podcasts, Circle P. It's where I bring plebs just like you that have goods and services to plebs just like you who want to buy those goods and services. You will buy it in Bitcoin, because if you're not selling it in Bitcoin, you're not in the Circle P. Go to GreatGhee. Go get some ghee at GreatGhee. Now, Wall Street banks pitching a conniption fit over stablecoin yield, or at least I guess that's what we're going to find out, because they're weighing a lawsuit over crypto banking charters. Wham, my diaper's so wet and my lollipop fell in the frickin' ant pile and I've got grass all over my skirt. Wham, my socks are dirty. Oh, God, it's like children. It's like children. Vismaya V tells us just how bad the mess in the diapers is going to be. The Bank Policy Institute, crybabies that they are, which represent Wall Street heavyweights including JP Morgan Chase, Goldman Sachs, and Citigroup, is mulling a lawsuit against the Office of the Comptroller of the Currency over its push to hand federal banking charters to crypto and fintech firms. It arrives after the OCC, led by Jonathan Gould, a Trump appointee and former crypto executive, effectively lowered the bar for crypto and fintech companies to obtain national trust bank charters, granting them the right to operate across all 50 states, according to a report by The Guardian, which cited a source familiar with the matter. Circle, Ripple, Paxos, Crypto.com, and the Trump-linked World Liberty Financial are among those that have filed for or received conditional approvals. Banks reportedly say the OCC's reinterpretation allows firms to operate with bank-like powers. Ooh, are they superpowers? Without the full regulatory burden that traditional lenders face. Last October, the BPI warned that allowing firms to choose a lighter regulatory touch while offering bank-like products could blur the statutory boundary of what it means to be a bank, heighten systemic risk, and undermine the credibility of the national banking charter itself. Quote, the incumbent's lawsuit talk is less a principled objection to bringing crypto under supervision and more of a protest against a two-tier system where newcomers can enjoy a clean, modern charter while legacy institutions remain shackled to every bolt-on rule written since the 1930s, Joshua Chu, a lawyer and co-chair of the Hong Kong Web3 Association, told Decrypt. Chu warned the U.S. approach to crypto bank charters could strain regulatory oversight and damage credibility if global standards are not incorporated, saying the move risks, quote, hardwiring tomorrow's enforcement and credibility crisis into today's chartering decisions. Pausing to say, welcome to life. Every decision you make is going to have future consequences, dude. Change your diapers. Quote, it is ironic that for decades, the U.S. has leveraged AML rules, dollar dominance, and its grip on correspondent banking to strong-arm other jurisdictions into tightening their regimes under the banner of FATF best practice, or FATF's best practice. He said, quote, yet FATF mutual evaluations have repeatedly flagged U.S. deficiencies, and that gap is increasingly being seen as a strategic risk to its financial reputation and leverage, end quote. When Kraken secured a Federal Reserve master account from the Kansas City Fed earlier this month, becoming the first crypto bank ever to do so, the BPI immediately accused the Fed of jumping ahead of its own process. The American Bankers Association also decided to wade into the shallow end of the children's pool, urging the OCC last month to slow its charter approvals while stablecoin and digital asset regulatory frameworks remained unfinished. Pointing to the collapse of FTX and Celsius in 2022, the ABA warned the OCC to, quote, be patient, not measure its application decisioning progress against traditional timelines, end quote. It means stop doing things. You're making us angry. Last year, the Independent Community Bankers of America warned that the plan would create a significant loophole in a foundational principle of bank regulation and had previously opposed Coinbase's charter bid as, quote, an impermissible reinterpretation of federal law. Wow, they are really crying. Meanwhile, Gould told the Blockchain Association's Policy Summit last October that efforts to block crypto custody from the federal system were a recipe for irrelevance, defending more than $2 trillion in existing digital custodial activity at national trust banks. So there you go. It looks like some pretty messy diapers. We may actually have to go down to Costco and get lots of diapers, like pallets of diapers and pacifiers. I'm watching grown men in suits lose their mind over something they can't control. And they're doing everything that they can to control it. I would love to see the banking lobby, like all of them, get together and sue the living shit out of the OCC and see how far that actually gets them. It's ridiculous, but we have numbers to run. CNBC Futures and Commodities, and there it is. The whipsaw. Energy getting pounded into the ground, the likes of which I have not seen in like forever. Brent North Sea down 16.5 points. Back you go to 82.67. West Texas Intermediate likewise down 17.6% to $78.01. Natural gas getting kicked in the crotch, 5% to the downside, back below $3 you go. Gasoline is down 10% to $2.52 a gallon, and Merbon crude is down 13% to $95.86. And you might ask yourself, what the hell happened? I'll tell you what happened. Everybody that has anything to lose in the midterms in the United States and everybody else in the world that has anything to do with keeping their people happy took a collective shit when they saw what was going on with the oil prices as caused by not just the conflict in Iran or Iran, but also the Strait of Hormuz, which is all part of Iran, kind of. It's part of the same whole juggernaut thing. And they did two things. On the global level, all of the oil producers or anybody with strategic petroleum reserves said they are going to tap them. I need to reminisce a little bit, and I should have looked it up, and I did not, so I'm asking you, beloved listeners, could you find out, did we ever refill our strategic petroleum reserves after Biden damn near emptied them? He said he was going to buy cheap oil to fill them back up, but I never really heard whether or not we did. It'll be interesting to find out. But the rest of the people or rest of the countries that have anything like a strategic petroleum reserve, and there are a lot of them, have all said that they are making plans to tap those reserves to keep the price of oil down so that the people can flourish, which is all bullshit anyway, but that's what they're saying. But in the United States specifically, Trump also said that, let's see, what did he say? We are very finished in Iraq. We are very complete in Iraq. He said something along those lines. I can't remember exactly, but it started with the word very. It reminded me of, oh yes, mission accomplished. The whole of Russia cannot seem to get the fuck out of Ukraine. And yet somehow magically, maybe through ferries, the United States is going to be able to sew up this entire Iranian issue it like maybe today or tomorrow or well in a couple of weeks or something like that. Not to remind ourselves how long we were in Iraq, Afghanistan, God only knows where the hell else. But we're going to clear this one up. We're clearing this one up toot sweet, right? It's going to happen because Iran doesn't have as much armament as Iraq did and Afghanistan. Yeah, see, I'm calling bullshit. So we'll have to see what the hell actually happens. But metals are screaming. Palladium is up 0.5 point. Gold up 2.6% to 52.37 and 6 dimes. Platinum is up 3.25. Silver is up 6 full percent points and beyond, back to $89.69 an ounce. Copper is up 1.8%. Almost all ag is down today, except for chocolate. It's the winner, 4.29% to the upside. Biggest loser appears to be wheat, 3.15% to the downside. Probably something to do with shipping. Who knows? Anyway, live cattle up 1 point, lean hogs up over 1 point, and feeder cattle up just under 1 full percentage point. The S&P loves that we're going to be finished with Iran sometime after lunch today. It's up 0.6%. NASDAQ is up 0.8%. The Dow is up almost 1 full point. That's about 441 points, not percentage points, but if the Dow is 48,211, whatever, that's the price. So the price, that's what they're saying. Anyway, it's up 445, 441, somewhere around there. S&P mini is up 1 full point. And then we got Bitcoin it's trying 71,030. That is a $1.42 trillion market cap. And now we can get 13.6 ounces of our favorite shiny metal rock with our 1 Bitcoin, of which there are 20,223 and 0.03 of. Average fees per block are nominal 0.02 BTC, taken in fees on a per block basis. There are, oh no, I screwed up. Oh, I got to get it back. Where'd it go? Where'd it go? Oh, what was I looking at? Oh, mempool. Shit. I hate it when I do that. I accidentally closed the tab for whatever reason that I closed tabs. There are, in fact, about, 32 blocks carrying 32,000 unconfirmed transactions waiting to clear. High priority rates of 3 sats per VByte. Low priority is going to get you in at 0.9. Mining 1.01 zettahashes per second. That is the hash rate of the Bitcoin network. That kind of gives us a number of how much security the Bitcoin network has. And quite frankly, that's enough for me. Now, where are we at? Yes, Cypherpunk Day. Yesterday's episode of BitcoinAnd, I got Nick Dose with 166 sats says, cheers. And I say cheers back to you. Pies with 121 gives me emojis I can't read because my operating system is that old. And Noster Gang with hashtag free samurai and 100 sats. And I appreciate that, but that is all we have for the weather report. Please donate to the show. Welcome to the part 2 of the news that you can use. Bitcoin has a golden opportunity with AI agents. It's time to build. With Matt Corallo writing for Bitcoin Magazine. And he says, for all of Bitcoin's life, it has been fighting an uphill battle against fiat currencies that mostly do the job of being money. Obviously, fiat has plenty of uses, but when it comes to impacts immediately visible to everyday people in much of the world, Bitcoin is not 10 times better. Some may even conclude that they would prefer a system based on neutral money to government-rigged ones, but entrenched fiat systems work well enough that few want to deal with the hassle of constant conversion. With the rapid growth in agents, AI agents, capabilities, a huge gap has opened that Bitcoin has a shot at filling. Instead of competing with entrenched interests as you would with fiat, in the agentic payments field, everyone is starting from zero. In a recent post on Spiral Substack, I pointed out that all of the payment standards being developed for AI agents haven't yet gotten off the ground. Credit cards won't work in a world where automated tooling is making purchases. The web is filled with CAPTCHAs and heavy investments in blocking bots rather than enabling their use for commerce. Even if they offered payment methods that agents could use, few merchants today have websites that agents can reasonably navigate. No matter what payment method agents ultimately use, it will require every merchant to adapt to a new world. With no one company owning both the agent and merchant sides of the marketplace, this leaves a wide open opportunity where it's still anyone's game. Better yet, with the popularity of open source agents today, no company owns much of the purchasing side at all. If the Bitcoin community plays its cards right, there's a good shot at a large part of the future of commerce flowing over open rails that are not controlled by any single company. There's still a lot to build, and nearly every payments industry player is trying to position itself to take the crown. Visa is working on an intelligent commerce product. OpenAI and Stripe announced the Agentic Commerce Protocol. Google announced AP2, and Coinbase announced an extension of its own for crypto called X402. The Bitcoin community's lack of central planning makes responding with their own options more chaotic and harder to follow, but that's also the strength. Lots of people trying lots of different approaches to achieve the same goal is more likely to succeed than a single focused approach that might be wrong. With Lightning surpassing $1 billion, that's billion with a B, Lightning surpassing $1 billion in monthly transactions, and Square enabling Lightning for its in-person merchants, it seems the technology is finally here that will let Bitcoin cross the chasm and become everyday money. Some ideological merchants have been accepting Bitcoin for years, and as we continue to integrate Bitcoin wallets into agents, we'll create yet more reasons for every single merchant that wants to sell things to join in. But for that to work, Bitcoiners have to step up and use the tools at their disposal. If people aren't trying to buy things with Bitcoin, merchants won't care. Luckily these days, you don't need code to build tools that find merchants accepting Bitcoin payments. You don't even have to sell your stack to buy things with Bitcoin. Install an agent, give it a wallet, give it some Bitcoin, and tell it to go buy your monthly beef tallow subscription. Tell it to email merchants it wants to buy from and ask them to support Bitcoin. Point it to Bitcoin merchant communities and have it explain to any merchant it comes across that it wants to pay them without Visa taking a cut but wasn't able to. Thanks to extensive existing work, Bitcoin is already one of the best ways to enable automated online commerce. Instead of merchants having to fill their sites with CAPTCHAs to prevent bots from using stolen credit cards and dealing with chargebacks, many Bitcoin payment processors can provide merchants with local currency within a day. Instead of being exposed to the risk that an operator's single private key could seize their stablecoin, merchants can choose from many payment processors, whether foreign or domestic. This competition drives down fees and means we're not building new payment rails on a platform that will inevitably seek higher rents once its dominance is cemented. These issues aren't top of mind for most, but we must get the new rails right. Stablecoins look great at first glance, but moving to a world where one company like Coinbase owns both the platform base and earns all the interest on its currency float, USDC, where payments are made, is not a recipe for long-term success once everyone is locked into using a payment method. Switching away as the operator increases fees that won't be practical. It doesn't matter whether the protocol agents used to communicate with merchants is based on some open standard. If the vast majority of agents have funds on only one platform and the vast majority of merchants accepts funds on only one platform, switching will then be impossible. While Bitcoin has come a long way on its journey to becoming a reserve asset, it is only beginning its path towards everyday money, and that's different. Bitcoin reaching escape velocity on the first does not imply that the second is guaranteed. In fact, far from it. With so much competition from every payments industry player, not to mention stablecoins, there's a lot of outreach and work to be done to build payment momentum. Still, we can't let this opportunity pass us by. If you believe commerce should happen on neutral money rather than corporate gatekeepers, it's time to get to work. I see where Matt's coming from. I mean, and I certainly don't disagree with him. I'm just afraid that it's going to fall upon deaf ears. But then again, maybe not. We have seen a lot more merchant adoption. People like Steak and Shake is kind of a big deal when they start taking Lightning payments, and they keep talking about it. See, that's the great thing about Steak and Shake. They didn't just do this thing and then all of a sudden we don't know what the hell's going on. Like, I still don't know what the hell's going on with the United States Strategic Petroleum Reserve. I don't know if we filled it back up. I know we tapped the shit out of it when prices were sky high. We were looking at $120 oil, and that was for West Texas Intermediate, which means you were looking at $135 for Brent North Sea. Nobody ever talked about it again, but people like merchants like Steak and Shake, like every week it seems like they come out with at least one tweet on X that says Lightning has enabled this. Look at our Lightning stuff. This is great. I love Lightning. You know, they keep everybody informed that yes, they're still using it. Yes, it still works. And yes, it's fucking awesome. But I don't really see that in a lot of other places. Jack Dorsey should actually be doing that with Square, you know, and we're going to get to him right now, in fact, because Bitcoin diehard Jack Dorsey, he doesn't like stable coins, but Block's going to use them anyway. Stacy Jones from decrypt.co, longtime Bitcoiner and Block Incorporated CEO and co-founder Jack Dorsey has very reluctantly gotten on board with the idea that the company's customers are embracing stablecoins. Quote, I don't like that we're going to support stablecoins, but our customers want to use them. I don't think it's wise to go from one gatekeeper to another, he told Wired. Dorsey's hesitant embrace of stablecoins isn't exactly a heel turn, but it is a departure from his allegiance to the first and largest cryptocurrency by market capitalization. Dorsey is the kind of BTC aficionado who has compared the Bitcoin white paper to poetry. During the same 2020 podcast interview, he told MIT research scientist Lex Friedman that he takes comfort in knowing that Bitcoin inventor Satoshi Nakamoto has remained pseudonymous. Quote, I think it was smart not to do it anonymous, not to do it as a real identity, but to do it as a pseudonym, because I think it builds tangibility and a little bit of empathy that this was a human or a set of humans behind it. There's this natural identity that I can imagine, end quote. He founded the Crypto Open Patent Alliance in 2020, which would later challenge and then win in court against computer scientist Craig Wright's false narrative about being Satoshi Nakamoto. During the same interview with Wired, he was very careful to clarify that Block aligned itself with Bitcoin, not crypto more generally. Quote, because I believe the internet needs an open protocol for money transmission. Block has embraced Bitcoin in multiple ways, including offering Bitcoin buying and selling through Cash App, enabling Bitcoin payments via its Square merchant terminals, and developing a hardware wallet and modular mining rig system. The stablecoin mention likely refers to something Block business lead Owen Jennings said during the firm's earnings call in February. During that call, he told investors that the company is in the process of rolling out its new core payment flow. Quote, critically, that's connected to MoneyBot. And then it also is the flow that is built to support stablecoins. So we're continuing to tweak things there and get that rolled out to 100%, he told investors. MoneyBot is an agentic AI assistant integrated into Cash App by Block. It was launched in late 2025. The company has said the always-on assistant will deliver contextual insights and actionable suggestions based on customers' in-app activity. The integration of agentic AI has come at the cost of roughly 4,000 jobs. However, 40% of the company's staff, as announced in late February. Okay, that was a blown sentence. And it's not my fault. It's literally written as a blown sentence, so it doesn't make much sense. They cut 40% of their workforce. Whatever. Quote, intelligence tools have changed what it means to build and run a company. A significantly smaller team using the tools we're building can do more and do it better, Dorsey said and shared on X. Okay. So we were just talking about Matt Corallo, which is also known as the Blue Matt, if I remember correctly. And I want to go back. I want to go back to this particular article by Matt Corallo. Let's see. Yeah, he said, it says here, in a recent post on Spiral's Substack, I pointed out that all of the payment standards, blah, blah, blah. Well, Spiral is also Jack Dorsey. It's sort of a thing. So I'm wondering, and I don't know if I'm going to be able to find out here. I'm sorry. Works for Spiral, because I don't know if Matt Corallo works for Spiral or not. He does. Matt Corallo is an open source engineer at Block and Spiral. It says Block/Spiral. So here we have Matt Corallo writing this for Bitcoin Magazine, saying that the future is here, man. We need to push Bitcoin into the agentic AI space as a payments, not only option, but best in class option, or just best in class. And you can have your other options, but they all suck. Only use Bitcoin. And he works at Block. And yet we just got finished talking about how this dude, what's his cat's name? February. Good God. Where's this guy? Oh, Owen Jennings. Block business lead Owen Jennings. So Owen Jennings said that, they're connected to MoneyBot. It's a flow that's going to built to support stablecoins, and we're continuing to tweak things. And then we've got another employee, Matt Corallo, that works at the same company, saying that it's got to be Bitcoin for all this. And Block already has an AI agent working. So I think that something's going on inside of Block that's a lot bigger than all of us think about. And yes, they're probably going to use stablecoins. Well, clearly they're going to start using stablecoins, but it's not going to be very long before people understand that, hey, I've got 10,000 Tether. Oh, well, good for you. And then you'll see the purchasing power of that Tether go down because it's pegged to the very thing that inflates a fiat currency, in this case, the United States dollar. Only Bitcoin doesn't do that. Now, Bitcoin has got other problems. It's attached to market forces, and that can cause, really low points, but it can also cause really high points too, to where you've got a lot more purchasing power than you did a year ago. And generally speaking, over a 17-year period, your purchasing power has basically done nothing but increase if you bought all your Bitcoin on day one. Right? So I think that Jack Dorsey and Matt Corallo, because Matt was on a couple of other Bitcoin podcasts. So they're getting the message out. They're talking about a lot about agentic AI. We know that Block and Spiral is a Bitcoin company. We know Jack is saying that he's reluctant to use stablecoins, but everybody wants to use them. I smell something brewing. That's what I'm saying. But it's probably not brewing in Bhutan, who has sold $42.5 million worth of Bitcoin in 2026 as their national stack has dropped to 40% from its peak. You know, maybe it's just from living in the Himalayas. I don't know. Anyway, this is CoinDesk. The tiny country of Bhutan is quietly selling its Bitcoin, and the stack is getting thinner every month. The royal government of Bhutan moved 175 Bitcoin worth 11.85 million late yesterday on Monday, according to Arkham Intelligence. It suggests a consistent OTC or Treasury Management counterparty, so it doesn't look like it's moving directly to an exchange. But it doesn't matter because it's being interpreted as they're going to sell it. Okay, so the activity is done by Bhutan's state-owned investment arm, GreatGhee Holding, which spearheads the country's BTC mining operations. The February activity was more extensive than a singular transfer. Arkham's outflow shows 4 separate moves that month alone. 184 BTC transfer, there's 2 sends to QCP Capital's merchant deposit address, and that's worth 200 Bitcoin, worth $15 million combined, and then a $1.5 million USDT transfer to a Binance hot wallet. That's about 30.7 million in February alone, followed by Monday's $11.85 million, bringing the 2026 outflow total to $42.5 million. The QCP Capital transfers stand out as sending Bitcoin to a trading firm's deposit address twice in 1 month is more active than simple treasury drawdowns. It suggests OTC, or over-the-counter selling, or structured liquidity management rather than just moving coins between cold wallets. The balance history chart tells a bigger story, however. Bhutan's stack peaked at 13,000 Bitcoin in late 2024. From 13,000 to roughly 5,400 is what they have now, and that is a 58% reduction in coinage. The dollar value has been hit twice by the selling and by Bitcoin's decline from around 119,000 at the peak to $69,000 today. What was likely a position worth over $1.5 billion at its height is now $374 million. I've got a diaper for you, so, whatever. In December, Bhutan unveiled a national Bitcoin development pledge committing up to 10,000 Bitcoin to fund Galethu Mindfulness City, a special economic zone designed to use digital assets for its financial reserves. Bhutan mined its coins using surplus hydropower, and unlike strategy or corporate treasuries that bought at market prices, there's no break-even math pressuring these sales. Every transfer is in profit. The Arkham balance chart shows the full arc, a slow build from near zero in 2021, steady accumulation through the bear market, a ramp to roughly 13,000 Bitcoin by late 2024, and then a sharp decline that just hasn't let up. The transfers have gone to the same counterparties in similar sizes without any obvious correlation to specific price moves, which looks more like a treasury running a planned drawdown than a holder getting shaken out of their position. GreatGhee Holdings did not reply to a request for comment. Yeah, they're not going to, ever. So Bhutan selling their Bitcoin at a time that honestly, there's not really that much of a compelling need to sell your Bitcoin. In fact, this is kind of a situation where you kind of want to buy some. But okay, whatever. Babylon and Ledger, let's see here. Babylon and Ledger partner targets secure use of Bitcoin as DeFi collateral. So now Babylon and Ledger. Let's see what these cats are doing, and then we'll be done for the day. Babylon Labs has partnered with hardware wallet maker Ledger to expand access to its trustless Bitcoin vault infrastructure, aiming to make native Bitcoin more usable in decentralized finance while preserving self-custody. Yeah, we'll see if you do it. The integration introduces native Ledger signer support for Babylon's trustless Bitcoin vaults, known as BTC vaults, allowing users to authorize vault transactions directly from a Ledger device using the company's clear signing interface, according to an announcement. These vaults are designed to let Bitcoin holders deploy their assets as collateral in decentralized financial applications without relying on custodians, bridges, or wrap tokens. Instead, the assets remain on the Bitcoin network and are governed by programmable conditions that can be verified on-chain. Babylon co-founder David C. said the goal is to remove a long-standing limitation in the crypto economy. Quote, Bitcoin is the largest crypto asset, yet most of it cannot be used in digital finance without giving up custody or relying on intermediaries. Trustless Bitcoin vaults removes that trade-off. Bitcoin stays on Bitcoin, governed by predefined conditions that are verified rather than trusted, C said. Ledger will serve as the secure signing layer for vault interactions, meaning users can confirm and approve transactions directly on their hardware device rather than through a browser or a wallet interface. A key feature of the integration is Ledger's clear signing system, which displays the full details of a transaction on the device's screen before approval, allowing users to verify exactly what they are authorizing. Ledger Chief Technology Officer Charles Guillemet said the approach aligns with the company's core philosophy around digital asset ownership. Quote, if not self-custody, then why crypto? True self-custody relies on uncompromising security, and now Babylon BTC Vaults users can use secure signing, featuring a dedicated screen as part of their security model, Guillemet said. The collaboration also broadens Babylon's presence across the Ledger ecosystem, including connectivity with the Ledger through the Ledger wallet applications and support for Babylon's native token baby. It's a shitcoin. It's a baby shitcoin. A little tiny shitcoin. It's all cute and fluffy and in a diaper. So there you go. That's all the news that you can use for today. Please support the show. And if you can't do that financially, go to Apple Podcast and also anywhere that you can leave a 5-star review for this podcast and leave me a 5-star review and say something. Because apparently the way the algorithm works is it doesn't care if you get 5 stars. It cares if you get 5 stars and somebody actually wrote an intelligible paragraph or something like that. And if you would do that, that'd be great, because I know that takes time. And there's a friction event. You got to go to Apple, you got to get to my podcast, you got to sign in. That's a lot of friction. And I appreciate every step it takes to get a 5-star review, because that really does increase the surface area for the BitcoinAnd podcast. And after that, it's just absolutely appreciated. I'll see you on the other side. This has been BitcoinAnd, and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.